This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast. Welcome to the Planet MicroCap podcast. I'm your host, Robert Kraft. Thank you all so much for the support and for tuning in. If you like what you hear at Planet MicroCap, please take 2 seconds and give us 5 stars on Spotify or Apple. This really helps others find the show and join in the MicroCap conversation. I'm excited to announce that we've opened up registration for the Planet MicroCap Showcase Toronto in partnership with MicroCap Club, taking place on October 21 through 23, 2025 at the Arcadian Loft in downtown Toronto. If you're a MicroCap investor or enthusiast, you don't want to miss this event. Visit planetmicrocapshowcase.com to register now. I'll see you in Toronto. My guest on the show today is Thomas Richard, CFA and portfolio manager at Philippe Hottinguer Gestion, and he's based in Paris. Thomas has been diving deep into European microcaps, a market segment that he describes as so unloved and uncovered with unique inefficiencies and opportunities. In our conversation, Thomas lays out why Southern Europe, especially countries like Spain, Italy, and Greece, is currently one of the most interesting regions for microcap investing. He explains the value of bottom-up research, the importance of direct interaction with management teams, how non-European investors can begin navigating this often overlooked space, as well as some of the structural risks that exist in this space, including governance concerns and delisting threats. We also touch on specific names like Euroconsultants, Shelly Group, Reway, and ALA. And for full disclosure, I am not a shareholder in any of them. Thank you again for tuning into the Planet MicroCap podcast, and please enjoy my conversation with Thomas Richard. Thomas, thank you for joining me today. How you doing?
Hi, Robert. Thank you very much for having me on this podcast today.
Absolutely. It's great to have you. And look, firstly, it was great to meet you in person. You know, you were just at our conference in Vegas, Planet MicroCap Showcase. You were on this epic, 2-week road trip to Vegas, and then you also went to Omaha. Before we get into all the stuff that we're going to talk about today, European microcaps, your strategy, whatnot, what you look for and everything, I would love to hear about your 2-week road trip and how that went, how it was with Vegas, and then, now going on the road, going to Omaha, that whole experience. What was that like for you? I remember you also told me offline it's your first time in the US this last month. So I'd love to hear about it.
Yeah, absolutely. First time in the US, it was a great experience. So my feedback from Vegas is that I'm definitely better at investing than gambling. But that was a very good experience. So first in Vegas during 5 days, I did this conference, Planet MicroCap and MicroCap Club conference. It was the first time, and I think the first time you merged this show, and that was great. On 3 days, I met a lot of interesting investors. I also discovered new ideas and new companies that were present on the event. So that was a great experience. Then I did a road trip with 2 German investors until Omaha, and to do the week after the conference in Vegas, the annual shareholder meeting of Warren Buffett. So that was also a great time. So it was my first time here, and that was the one to go because as you know, Warren Buffett announced that he's stepping down from Berkshire. So that was a great experience also.
Absolutely. Were you in the room when he announced it, or were you elsewhere?
Absolutely. I was in the room, and everyone was clapping and during minutes. That was crazy.
Yeah, I bet. I'm sure there were some tears, and you're kind of looking around like, whoa, this is my first time at Berkshire, and it's the one where he's announcing his retirement. Like, whoa, this is it's kind of a surreal experience.
Yeah, very, very, very good experience. And also in Omaha, I used to meet a lot of investors, and that's good for networking, to also exchange some ideas and also discovering new companies, that all the side events on the days before the AGM were very interesting, and I met a lot of people in my 2 weeks trip in US. That was an incomparable experience. Yeah.
Very cool. No, it was really awesome having you guys in Vegas. I mean, you had a crew with you. It wasn't just you. It was Sven and I'm blanking on his colleague that was also.
Yeah.
Yeah, and so that came all the way from Germany, I think, Sven and his friend, and
Jan,
Jan, that's right. I apologize. Sorry, Jan. And yeah, no, that was super cool. And you guys definitely got after. One last question about your trip. I know you're Paris based. Local. It was your first time in the U.S. This is gonna be corny as hell, but I don't really care. Favorite food that you had while you were in the U.S. First time here, what was like that one thing you're like, I have to try this. I'm now in the US. I need to do this.
In terms of food?
Yeah, the food.
That's a great question. I tried some famous fast food chains that I haven't in Paris, or Shake Shack, or the other one, I don't remember, In and Out.
Nice, so there you go.
That's some chain that you don't have friends, so yeah, I enjoyed trying it, and that's that's not the best high quality food, but yeah, that's
the sad part is it's the best we got on the fast food side. Well, I'm glad you got to try some of that. That's awesome. So very cool. All right. Well, Thomas, to our task at hand, the main reason I wanted to have a conversation with you on the podcast, we were chatting about this even before the event, was, we wanted to talk European microcaps. We've had a number of folks on here talk about how they're, U.S. investors that have been expanding their horizons, expanding their investing universe beyond U.S. and even Canada, to now looking abroad to Europe, Australia, of course, too. But, now also, but specifically looking at, all the different opportunities in Europe. I mean, we did in one of our virtuals back in 22, we did a stock pitch World Cup where we had a few investors coming on that are pitching their favorite European ideas. So we've definitely been covering it a little bit, but it's also starting to, I would say, gain a little bit more traction amongst a US or just non-European microcap investor. And I'm really wanted to dive deeper as to maybe your thoughts as to why maybe some folks are expanding their horizons, opening up to some of these newer ideas and whatnot. But, to start off, and who knows? Maybe this is the reason. Ian Castle and Ryan Telford just announced the MicroCap Guts Index that they're posting on MicroCap Club, which is a really cool endeavor that they got going on there. And I mean, European microcaps have been kind of kicking butt in year to date in 2025 and outperforming US, Canadian, all other traditional microcap benchmarks. But I guess, look, to start us off, Thomas, what is your thoughts as to, and maybe you can base some of this on your own anecdotal experiences and some of the folks you talk to here in the US or that you talk to offline, whatever, why do you think maybe more US, Canadian investors or just non-European microcap investors are starting to look at European microcap stocks?
Yeah, for sure. So I can't really compare to Canadian and US microcaps because I'm more specialized on really European names and European small microcaps, but at least in Europe, this segment is so unloved, uncovered, nobody cares about. You are seeing a lot of outflows from this segment of the market since at least 5 years. So returns are not very good compared to large cap in Europe, but so this creates a lot of opportunities. At least there is a lot of inefficiencies in the market. I think it's the same in the US, but in country by country, you can also see a difference in approach in terms of investment. And for example, French portfolio managers tend to have a bias in France and invest more in small and micro caps in France. But we are definitely more open to invest in all around Europe. So we are quite agnostic in terms of countries. And at the moment, at least what is very interesting is south of Europe. all those countries, Spain, Italy, Greece, are the countries that were lagging Europe during like the past decade. And since 1 or 2 years, it's the opposite that is going on. So the South Europe, in terms of economic growth and market listed companies, are doing better than the North Europe, so Nordics, Germany, France, UK. Those countries are struggling a bit more because of course, they have higher valuation from the past, but also the countries by themselves are like a bit struggling a bit more in terms of economic growth. So yeah, you can find lot of different opportunities in every country in Europe, but at the moment, I would say that Italy, Greece, and Spain are very interesting in terms of growing microcaps and strong and growth and profitability also, and the valuation.
Absolutely. But take a step back. We're going to come back to, why Southern Europe is very interesting right now. But taking a step back into, maybe looking at some of the reasons for why European small microcaps have been unloved for so long. I mean, in your opinion, what do you think some of those reasons are? Is it just some of the macro stuff that's been going on? Obviously, in London with the LSE, I think some of that has had an effect where a lot of companies are just either delisting or just, going private, why not? So love to hear your thoughts.
You are right. The market is very fragmented between the countries, and in every country, not really at the same time, and the timing can be different, but you see the same, like people, or at least the big investors or the institutional investor investing more in ETF, in passive investing, in large cap, less risky company, because small and micro caps tend to be perceived as more risky. But in the reality, small and micro caps, if they are like growing, profitable, they have no debt, you can find like higher quality in terms of investment in the small and micro caps compared to the large cap. And that's something that that makes the segment quite unloved for institutional investors. And also the liquidity is quite low on those assets, and so you don't have the underlying vehicle, like an ETF can't go on small and micro caps in Europe. So just investors are not looking at it, and just taking back their money and investing more in ETF or large cap that are overperforming the small and micro caps over the last 3-4 years. So that might also explain that you have the opportunity to have a reversion to the mean, and in terms of performances, in terms of also flows, that's something that could happen.
Absolutely. And so you mentioned right now Southern Europe has been very interesting. What are some of the reasons for that?
For example, so we are quite invested in Italy, Spain, and Greece. For example, in Greece at the moment, so this is a country that is benefiting the most of the European recovery fund. So hundreds of billions going to Greece, but Greece is like a small country with with like a past of having a crisis in debt, etc. So the companies start really from they have a lot of delays in terms of investment. So they have to fill the gap between the other European country. They have to invest a lot. So Europe is spending money a lot in Greece. So that creates like a fundamental favorable environment, and you have some companies that are benefiting a lot from this. For example, there is a company named Euroconsultants. It's a 20 million market cap company, so very, very small. They are active in public administration consulting, and right now, so it's a company of 5 million revenue, and they have a backlog of 15 million at the moment, so covering like 2-3 years of growth, more than 20% growth. and compared to last year is totally game changing. But this company is not followed by anybody. You can't, it's difficult to have the filings, even in the annual report is not available in English. So that's the kind of exotic companies that you can find in the very small and microcap space. And so this company is like valued at 5 times the EBIT because it's kind of special situation. They have a building they could sell during the year. So the post-deal market cap of the company might be quite lower, and so you have those kind of inefficiencies in this market. But that's one example. But there are other examples of companies that are growing very strongly, have good profitability, and very low valuation compared to their other European comparables.
Absolutely. So real quick, are you a shareholder in it's Euroconsultants, right? Is that
Euroconsultants? Yeah, I'm a shareholder.
Very cool. So this actually inspires another question that I have for you, and that when I think about Europe, and maybe this is only specific to your strategy and the way that you look at investing in European small micros. Maybe this is the one that maybe most folks also think about. But like when you're looking at a potential investment in a European small microcap, do you really consider the economic growth of the country as part of your criteria? Would you say that's critical? Or do you also, as part of your criteria, look for companies that might be listed on one of these European exchanges, but might actually have a global customer base? I'd love to hear your thoughts.
Yeah, very interesting. So I'm really a bottom-up investor. So I like to see the fundamental and the value of the company before going top-down on the country. That's more on south of Europe. It's more like a favorable environment that we know, but we are not investing in those countries because there is a favorable economy extra. I'm trying to find specific companies in small and micro caps, so they are leader on niches, or they have a competitive advantage, and they have strong fundamentals with a good management. So growing companies, and that's the fundamental analysis that we are trying to do, and to invest in companies.
Absolutely. No, that answers the question. That makes a lot of sense. But one of the other reasons I asked this, and this might be just, naive American with my silliness and going there, but, in talking with a few fund managers that, I'm thinking of one guy in particular who, he's been spending a lot of time in Europe and going to visit, Finland and Denmark and Sweden, and spending a lot of time in these countries. And one of the things that I took away from some of our conversations and hearing about some of the companies he's looked at is that he's really focused on the culture as well. And that's what also makes it interesting, where, maybe putting aside economic growth, but understanding the culture better to know how, what a quality company, how a quality company is run in that particular country, because it can be different, depending on, that company's culture and how they do things. What do you think?
Yeah, you're absolutely true. And you have quite big differences in the culture, and also in terms of investment and in terms of management practices. So yeah, definitely you have to spend time when you invest in a country to talk with the management. So that's the best part, I think, of my job. It's doing conferences and talking with the management of company I own, or I would like to own, or I want to discover. And that's during those conferences, and also talking with local investors or local analysts, or the management of the company. That's where you can get this impression of quality compared to other companies in the same country, because absolutely from one country to another, you don't have the same standards, so that's impossible to compare.
Absolutely. Do you have an example maybe of, let's say you you were doing your due diligence, maybe going to I think you were telling me offline you went to a conference in Paris where, there's a bunch of European micro small caps there. And when you were going through the list of companies, were there any that, okay, this screens, well, this is interesting, I might want to talk to this one. Were there any that stood out to you? And you don't have to name the names if you don't want to, but were there any that stood out to you as like, all right, this screen's fundamentally interesting, I'm going to take a look, but you were thinking about, I don't know about the culture, because traditionally they don't have the greatest reputation, or that country, for good corporate governance, insider, all the main fundamentals that most of us look at. But then you met them, and you're like, whoa, this is not what I expected. Love to hear a story there if you got one.
Yeah,
Smiling, I know you got one there.
I got one, and that's a recent one from Vegas. So there are not so much European names at the conference, but there were some, and at least one that I didn't know before. And so it's a Bulgarian company named Shelly Group, and it's listed in Germany. So I'm not used to go to those countries like Bulgaria, Romania, those very eastern countries in Europe. But this one, at least from the company presentation they did, and after I did a management meeting with them and talking with other investors about the company. So the company is doing devices for smart home, growing very high, like 30-50% a year organically, with high margins, like 25% EBIT margin. And okay, the valuation is not so cheap, but for a company from this country listed in Germany and not very like known by the institutional investors, because it's not very covered, that was a very fantastic discovery. I started a very small investment just to follow the company, because that's why that's how I like to do. It's starting with a small position, and then start to know better the company, and then reinforce and buy again the company if they are doing what they are supposed to do. And that's how also you can judge for management, is like if he's over-promising or under-promising, and over-delivering or under-delivering. I think it's not in one instant, in one moment or one discussion that you can notice. It's during the time, and follow the company during quarters and years. That's absolutely the way to do.
Absolutely. That's a good example right there. For full disclosure, not a shareholder in Shelly, but yeah, they were in Vegas, and yeah, no, that was a good example in the sense that, like, I hadn't really looked at any Bulgarian companies listed in Germany, and there's so many examples of that in Europe, I would assume, of just like, maybe they have operations in Greece, but they're listed in, Frankfurt or whatever, wherever, and you're just kind of like, all right, how do I make sense of this? And you brought up another example, which can be also a big, I guess you'd say, barrier to entry for a lot of English only speaking, investors, is that, hey, a lot of these filings are in another language, and you have to go through. And yeah, there's a lot of tools out there now with like AI and stuff where you can probably quickly get a translation, but sometimes you then have to go and clean it up, and that can be tough. But do you think some of the investing tools that are now available out there are making it a little bit easier for maybe English only speaking investors to now look at some of these European names?
Yeah, absolutely. And of course, also from a French perspective, I could not invest in Greece or in Italy if I don't have the traduction tools. Sometimes, of course, they are not releasing the annual report or the news in English, so you have to translate this. But that's very easy today to translate any document, even an annual report with 100 pages. It's kind of in few seconds, and it's free. So yeah, but definitely, if I didn't have this opportunity to do the translation, at least I should focus even more on my meeting with the management and
Right.
talking with investors. But that will be even more like difficult. But that will be possible. But yeah, it's difficult if you can't read the reports.
No, 100%. What do you do like just copy paste chat GPT, please translate, or do you
No,
have you
you
allow?
on Google Translate, you
Oh,
have
you just do
definitely.
that? Oh,
Yeah, yeah, that's okay, but not like a lot of microcaps in Europe are publishing in English also. So you have maybe the new listed companies or the companies that don't really care about equity market and being covered and being known. But that's why you have the most alpha to generate and the most market inefficiencies. But of course, a large part of European names are publishing in English. Yeah, yeah,
that'd be
totally.
fun. That'd be funny if the ones that are like really trying to stay under the radar, they start publishing their reports in like some ancient language that's not even used anymore, just to really mess with you and be like, oh my gosh, like where do I get a translation for Aramaic? I don't know. That'd be kind of funny.
Yeah,
But another thing I meant to ask you, because you mentioned this earlier, how obviously you've been finding Southern Europe very interesting right now when compared to some of the Nordic countries that have been overvalued in European, which is funny because again, talking to some of my just anecdotally and talking to some of my friends, they're like, Finland, Sweden, like, oh my gosh, there's so many opportunities everywhere, and just trying to find your, the favorite one and stuff like that. So, why, in your opinion, do you feel that you've been seeing that area is overvalued? And why do you think some people might think it's still undervalued?
yeah. Nordics is a good example because they are very mature and professional in terms of listed market, and that's I think also linked to their institutional pension fund. So there is really a culture of being listed, and I have a very deep market in terms of companies listed compared to the rest of Europe. So the universe is bigger, and also you have more institutionals investing in listed companies. The retail is investing a lot, as in the US, but in other countries in Europe, like in France, in Germany, Italy, etc., retail is not really investing in listed companies. So that creates also more liquidity. Valuation can be more higher because they are known by retailers, and so you have less market inefficiencies. But yeah, Nordics, they are struggling since 2-3 years because they are coming from very high valuation in 2021. But yeah, I think today it's more interesting to look at. But yeah, they have historically they have a higher valuation than the rest of Europe.
For you, in your opinion, where do you see, on the whole, not just like what's the most interesting right now, but traditionally, where have been the most opportunities on the publicly listed side? Is it Paris listed companies? Is it London? Is it the Nordics? And like now, the Southern Europe is only interesting now because it's not as robust of a capital markets as some of these other areas in Europe.
Yeah, of course, the universe, I mean, the number of listed companies in terms of microcaps, I think in Europe, between 20 million and 2 billion, let's say, market cap, you should have around maybe 2,000 companies. And the biggest markets in terms of number of listed companies. So you have definitely the UK, the Nordics, France and Germany, and Italy also is a very deep country with a lot of listed companies. So those are the main countries I think.
What I'm just curious. I mean, obviously, Europe's, have financial markets forever, right? The longer than even the U.S. has been in existence. Not saying that, I mean, it's fascinating that the universe, compared to the U.S. and Canada, it's, you know, 5 times less in terms of, or no, probably more, because you're even saying just between 20 million to 2 billion. I mean, for sub 500 million in market cap, or even sub 300 million market cap in North America, it's 10,000 plus names, and just for that smaller universe. I mean, what would you say are some of the reasons why there isn't a bigger universe of companies available to look at?
Yeah, I think the general thought about this is that European investors tend to be more risk averse than American investors. So there is less capital dynamism in Europe. So the capital are flowing maybe less easily than in US. So the companies, they can't get really they don't go listed because that will be for them maybe a low valuation that the investor are demanding, or maybe they can't raise the capital they want. And that's also something that we see that European companies got listed in US because they can expect higher capital, higher valuation from their company. So yeah, I think US is definitely more attractive for this point of view than Europe, and that explains why we have an universe that is less big, because European companies, they tend to not raise money on the market.
Do you think that'll ever change? Or is it changing? Is there starting to be some more momentum amongst entrepreneurs that are like, look, if we go we're quality business, we want to grow faster, let's, maybe instead of going public in the US, where it will very likely cost us way more money than it would be to go public on one of our local exchanges. I would just think that in some of these countries, they would want to, I don't know, promote that or embrace it, or want to try and do more of that, because it'll encourage more investment within their own country and just build up the economic GDP. Maybe attract some folks from outside the country to want to invest. Here's a way to invest in some of these companies because they're now public on our local exchange. I don't know. I'm just curious if anything's being done. And it's trying to help so you have a bigger universe to choose from,
But there are some things that are done, but that's sometimes in the opposite way that other things are done. I mean, for example, Italy, they have fiscal incentive for companies to getting listed. So that have an effect. So Italy has a lot of more IPOs on the recent years compared to France or Germany. France, for example, are net. The universe is getting smaller every year compared to Italy, because they have this fiscal advantage. But at the same time, you don't have in France or in Italy a government that is making some rules that are that will for the public, for example, money, or the pension funds, or they don't encourage the investment in the small and micro cap space. You don't have so much fiscal incentive to invest in this market. In the past, there was a fiscal incentive in Italy named the PIR, but it's closed since. So the fiscal advantage is over. So people are just getting back their money so the liquidity from the market is worse. So the valuation are getting worse, and so this creates also opportunity, but the trend is not good. I mean, so yeah, that's also, I think, small and microcaps market are driven by the flows of institutional investors, and if the government are taking more flows in those segments, that could help, but you don't really know when this will happen.
That's very interesting. Very interesting. So listen, this is why I wanted to have you on. I don't know these things. I'd like to learn more. So, now getting specifically to your style and your investing philosophy and your criteria, what when you're looking at a potential European small or microcap, what does that ideal investment look like to you? What are some of your criteria that or boxes that you want to have checked before you go to that next stage or even take a starter position?
Yeah, I really like company, quality company. So, so growing companies, profitable companies, with high standard management and with attractive valuation. That's, I think, the main piece of what I'm looking at, and also the fundamental analysis prove that it's a leader, it's on a niche, and they have a competitive advantage or something like this. I can get you an example if you want of I think an ideal investment.
Go for it.
Like Reway is Reway. It's an Italian listed company, so it's an IPO from 2023, and it's like an infrastructure company. They are doing extraordinary maintenance for highway and railways. So the infrastructure, like the bridges, the tunnels, the viaducts, and they are doing this maintenance. So the Italian government has been underinvesting during the past decades, and in 2018 there was this accident with the Genoa bridges that like just fell down and killed 50 people, something like this. And since this, the government has changed and invest a lot in the infrastructure, in the maintenance of the infrastructures. And this company is kind of the leader in north of Italy. So they are benefiting from these investments. And at the moment, this company is like 200 million revenue, and they have a backlog of more than 1 billion revenue, 1 billion euros in the backlog. With already the margin, 20% EBITDA margin secured in the backlog. So it's kind of more than 3 years visibility with a growth of 10-15%. And they will reinvest the money that they get in acquisitions. They did already one last year that was very good, a lot of synergies. And this company with this high visibility, growing, profitable company, the valuation is like less than 10 times earnings and 6 times EBITDA. So that looks attractive for me, at least. Yeah, there's no catalyst, but it's no brainer, I think. What do you think about?
Hey, listen, that's your call right there. So I mean, Tom, real quick, so you are a shareholder, just to be clear.
Yeah, totally.
How do you spell the name of the company again? Just for folks.
Reway, Reway.
Reway. Okay, got it. Italian infrastructure. Got it. So I'd love to hear more also about your research process too. I would imagine it's just it must be so terrible to hop on a flight out of Paris and fly to Italy, get to do some really cool due diligence, in Rome or Florence, or then going to Greece afterwards and stopping over in Mykonos, and maybe go to Athens and do some more due diligence in some of these horrible places in the world. So yeah, but anyways, in all seriousness, what is your research I mean, it's very easy. That my whole point is it's extremely easy to go and visit some of these areas for very cheap, I would assume. And so, what does your research process look like? Do you do site visits? You better. You're in Europe. You better. I'm just saying.
Yeah, so I'm meeting a lot with the management, so that's very the part of the process. So I'm meeting the CEO or the CFO of companies where I invested in 2, 3, 4 times a year. And also when we invest in a new company, we like to see the management before investing in the company. So that could happen during conferences. I went to Italy last year and to Stockholm, for example, for MicroCap conferences organized often by brokers. And you can see a lot of companies at the same place at the same time, and that's great because you can have those conversations local investors, local analysts, also the companies. So yeah, definitely traveling a bit in Europe to get some insights about the businesses, and also to have this conversation face to face with the management. That's really important. Yeah.
Absolutely. I mean, what's some of the reactions from some of these management teams when they hear from? I mean, look, you're not a retail investor by any means. You work with a family office portfolio manager and stuff. But I mean, it sounds like it's just not as robust, in the small microcap space out there. How often do you hear from it? Like, oh, hi, nice to meet you. Thanks for your interest. You might be the first investor that's ever called or come to visit our site. Yeah, by all means, come. I mean, how often does that happen? I'm sure it's more often than not.
Yeah, and that's I have a good story about this.
Let's go. I knew it would. Let's go.
In Greece, so it took me like 6 months to get a meeting with a company since I am invested in, and I think it's a great company. So high growth, good profitability, very low valuation. So the management didn't want to do not want to talk with investors. So I was not in the site in Greece to see them, but so I try with the other network. Like I used a broker that put me in contact to talk with the management of this company specifically, and so it takes a long time. But then when you have this, like the conversation, you can understand more the company. That's the point. That's great, and I think there are not so much investors that are doing this. Maybe the local portfolio manager in Greece know the company, but yeah, they definitely don't receive the proper attention from the rest of Europe or the rest of like worldwide investors.
Fascinating. No, it's very, very interesting. Inspiring a lot of ideas going through my head right now. So, what would you say was an investing experience that really changed your career the most when you were looking at various European small microcaps?
Yeah, so good question. I had some experiences and even so similar experiences, and the last one was last week. So you have sometimes in Europe, so that's great. We like to invest in companies that are owned by the management or the founders, or where the management, they have skin in the game and they have big incentive to the success of the company. So they are big shareholder, but sometimes you have some like companies getting delisted because they get a bid from a private equity, from a company, from any types of investors, and those companies are not properly valued at the end of the day. So my example of last week is my first position in my fund. So it's ALA, ALA. It's listed in Italy. So they are doing distribution and logistics services for spare parts of aeronautics and defense. So they are in the programs of the F-35, Rafale, Eurofighters, all that stuff. And this company is like growing like 15-20% organically each year. The margins are improving. The management, Roberto Tona, the CEO, is doing great job since 4 years that he's managing the company. And the founders, they own 75% of the company. They just sold it to a private equity. They are still investor in the new co that is buying the company, and the valuation is not good. Like there is no premium the day of the announcement of this takeover bid, and the valuation they are not so good for this type of quality of company. And that's because there is a conflict of interest, because the management or the founders, they are buying their own company and they are delisting the company. And sometimes it happened. So in Italy last week, but also in Spain last year. So yeah, sometimes these are not great experience, and I don't have the good answer for this. But yeah, as an investor, we definitely want to have management that are incentivized or in the same the same ship as you. But yeah, sometimes you can be screwed by some guys also.
Yeah, that that happens for sure. So, and real quick, were you a shareholder in that deal, or yeah?
Yeah.
So we've covered a lot here today. I'm sure I'll have you back on at some point to get an update on European small. I don't even want to say nano caps. The universe, the small micros. I mean, look, we're up to 2 billion. I mean, geez, look at us. We might as well be a Reuters. But anyways, what would you say? What advice would you have for maybe some new microcap investors that might be listening to this, or even, folks who've been doing it a long time that are interested and want to kind of dip their toe and get started and looking at a wider opportunity set in Europe?
Yeah, so I think for Europe or for like a new investor in general.
No, for Europe.
Yeah, I think from an a US perspective, for example.
US perspective, or just maybe for a non-European perspective.
Non-European, yeah. So yeah, definitely try to, like, you can find a lot of free information on the web and a lot of very interesting investors writing on the European small microcaps, so on Substacks, on specific blogs like MicroCap Club, but there are others. And you can find on a free basis those like more information about European small microcaps. But yeah, also you can engage, come in those countries, try to speak with the management. It's in small microcap space, it's kind of easy to have access to the management. They want to speak with investors, at least on the major, almost every time they want to have new investor base. So even like they would like to have US investor base in their shareholder structure. So that's I think just coming to maybe conferences in Europe, or trying to get some management meetings with a small microcaps company. That's something possible. Yeah, definitely.
We should get out there, at some point. That'd be pretty sweet. But yeah, no, with that, Thomas, this was great. Thank you so much for answering all my questions. This was awesome. So where can our audience go and find more information to get in touch with you, or to just learn more about your investing philosophy and background?
Yeah, absolutely. So that was great to be in this podcast. You can find me on LinkedIn at Thomas Richard, or you can, if you want to continue the conversation about stock picking or European small microcaps or exchange IDs, you can find me by email at t.richard@phhgestion.com. And of course, if you want to follow more closely my fund and my investment philosophy, you can go to the website of Philippe Hottinguer Gestion, and I'm writing every month the reports and the comments of the fund. So what we are buying, what we are selling, what are the news of the position in the fund. So yeah, that you can find this on LinkedIn and on the website.
And what's your handle on MicroCap Club as well, to see what you're posting about? It's at Abacus, right?
Yeah, Abacus. Yeah, absolutely.
Very cool. Thomas, thank you so much for joining me today. I really do appreciate it. Good luck, stay safe, and I look forward to our next conversation.
Thank you very much. Bye-bye.